the market, though, as you know, we have this PowerPoint to go through, which explains one thing. For instance, the fact that this webinar is intended for a global audience. The fact it could be so that the info in this session may not be suitable for everyone to get the corresponding info, whether this is indeed suitable for you, and other things on charting conditions and other details. Take a look at animalmarketsglobal.com, select your country of residence, and contact the appropriate entity. Also, you should be aware that of this risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only. By continuing watching this webinar from this point on, you agree with the disclaimer mentioned here. Alrighty, thank you for your attention. So we're going to take a look at the Camarilla pivot point indicator today as the main focus, but we'll be using other tools as well, like moving averages in conjunction with that, and sometimes trend lines, maybe even a fib occasionally, to determine and define the trend, to search for opportunities, to check if there are any filters, to establish the trigger, and decide if there's any entry method that I find interesting for myself. With regard to animal markets, take a look at the social media where you can get useful info. And last but not least, the calendar. This week is a tough week, I would say, because of the fact that we have a lot of pound news and dollar news this week. We got pound CPI coming up at 143. So that's hanging as a rock around the neck of anyone who wants to trade the pound. Then we have German ZW and dollar PPI, but more importantly, obviously, is all the bank of central bank governors speaking. We have a Canadian central bank speaking. We have a Euro CPI tomorrow, by the way, and dollar CPI. The list just goes on and on. I don't want to bore you, but we have Fed chairman speaking again. But more importantly, probably, is the fact that we have FOMC and we have a Scottish independence vote on Thursday, and the impact on the pound is unknown. It could be very volatile both ways. If Scotland decides to stay with Great Britain, it, I would think, could be pound positive. But this is just a guess. If Scotland were to decide to leave the United Kingdom, it would leave great question marks on what kind of currency it could have after that, and what share of the debt it would take over, and therefore maybe pound weakness. So that will be a very big unknown impact on the market. So those two things are going on. Really a lot of things, a lot of news events, but if we had to choose two, I mean, then the FOMC as always, and then this one-time event of an independence vote of Scotland staying in or leaving the United Kingdom. Apparently, according to exit polls, it's hanging in the balance. So let's see, this is a political process, let's call it, that will have its impact on future finance and therefore currencies. So we therefore could be very risky to trade the pound maybe Thursday or after the referendum is released. I'm not sure exactly when that result will be known. Alrighty, so with that behind us, let's take a look. I was looking at the euro-odd and pound dollar. In fact, pound dollar is breaking or has broken in the meantime to the downside. That looked like a very good one to me, although the problem is that the pound news event, of course, is getting closer and closer. Now 1 hour 40 minutes from now, when it broke, it's still about more than 2 hours ago, so it's still a decent time away from the news event, but that all depends on your personal preferences with regard to the news event, obviously. If you did take the break, why would anyone think about a break at that point? Because you got the L3 here, basically, and you got a good consolidation prior to it. This whole zone basically is kind of a range with the top and the bottom about the L3. So as price dipped to the L3 and stopped at it with a fractal right at L3, this was a good breakout. So maybe some of you caught that breakout trade here. For those that like to follow wave analysis, it's something that I mentioned already earlier on Emerald Markets website. By coincidence, if you saw it here, this is wave 3 magenta, looking for wave 4 magenta to end higher, or if we break below green, expecting downside for wave 5. But let's see if that is true. For the moment, it does look bearish, so we'll have to move on. Maybe we'll find something else that is happening right now. Euro dollar is approaching L3 too, so let's see if we can get a bit of a bounce. If it does bounce here, a break through the L3 would be good too. I would want to see a bit of a bounce though, because otherwise we could get the bounce a few pips later. I don't want to jump in right here personally. If you took it early, if you took this break or you took this trendline break, like the pound dollar, that's also working pretty nicely. But these breaks already happened about an hour ago, before our session. But the euro hasn't broken the L3 yet, so we could see a bit of a bounce. The pound dollar did already, and is steaming down lower. So if you're in this trade and you're looking for a target, you might want to think about the L5. You can zoom in out to the hourly chart too and take a look what's going on there, or the 30. No, hourly. And we're breaking through the weekly actually, so daily S3 could be something to look at, for instance. But with the news events, with so many news events around the corner, I am rather grabbing a bit more profit sooner than later, because although it does look pretty powerful to the downside, it could quickly revert into an upside just because it's basically the psychology of the market might be such that breakouts don't go too far, especially if you have all these news events hanging around its neck. Then it could be the breakout could be kind of tempered because of that. But if it does pass L5, then maybe S3, the daily S3 pivot point at 160 could be the next target. In 6 minutes, we'll see how this hourly candle looks like and see how much momentum there is in it. The euro odd is also actually past the H3. So this one is actually in a breakout trade too. So maybe here another example of a breakout that happened already earlier at the H3, fractal at the H3, bullish angled moving averages. You see this on the 50-minute chart. Look at the bullish moving averages here. Nicely pointed to the upside. Right, so not that that is, I mean, with Camarilla, you don't have to use moving averages, by the way. It's just the way I use it. It's not necessarily a must, by the way. You could just use Camarilla as is, and with an oscillator at the bottom, and that's it. But I like to get the visual confirmation of an upswing, and you can see fractal here stopping at the H3 and price trying to break above it. So this looks good. I think targets could be, for instance, here too, the H5. Same thing. Price is above the daily, weekly, and monthly. So here too, the daily R2, for instance, I think is probably pretty close to the H5. Let's take a look. You see, so that would probably be the target to think about. 144.46, just a few pips below the mid 50 level. 144.50. Now, if this starts to slow down too much, it doesn't exhibit enough momentum, you want to be careful and then maybe exit the long. But as long as it stays riding up like this. Now, you might wonder, how do I measure that? That's always a bit of a question. You can look at price action on an hourly chart, for instance. Keep an eye on if price makes a pretty steep downside and then goes sideways. You might want to exit, for instance. Or you want to use maybe very tight short-term EMAs, like a 3 and an 8, for instance. If the 3 crosses the 8, that's another way of getting out before it's too late, for instance, right? Because if it doesn't follow through with some steam here, it's not something I want to stay in. All right, so this one also happened. Let's see if there's anything. What I'm typically looking for, let me explain this way, is price to break above H3, H4, or below L3, L4, if there's sufficient steam, but not without a pause. For instance, here price is getting at the L3, but I'm not jumping in right away short at the L3 right here because price dipped, moved already substantially on the 50-minute chart at least to the downside before it got to the L3. So although it reaches the L3 now, I want to see a bounce and then break. This is what we saw basically with the pound and the euro odd on 50-minute time frames. Sometimes on 5 minutes, if things are really accelerating, it could be worth it. The Aussie broke the L3, but still has the L4 in front of it. Price is at the L4 right now, approaching the H3 and H4. And this could be a resistance level. And why is that? Because if you look at the bigger hourly chart, what do you see? A downtrend. If you have troubles with downtrend spotting, put the 21 and 89 EMA, and you'll see that this is a very strong downtrend because the 21 is angled very steeply, and even the 89. And the 21 is being torn away from the 89, indicating speed increase, right? Momentum increase. So that's how you can read it. So that would be one way of determining whether you're looking for breakouts or bounces on the 15. 1 hour is down, so what are we looking for on the 15? We're either looking for breakouts below L3 or rejections at H3, H4, H5, right? That's how you can use Camarilla. We're not looking for breakouts straight to the upside, not if you use the 1 hour as a trend, right? Sometimes, obviously, despite the hourly trend, a breakout to the upside on the 15 is good. Despite downtrend, sometimes breakout up on 15 works. But why is that? Often enough, there's divergence on the hourly, for instance, or double divergence. Here we have actually divergence, to be honest, on the hourly, but the 4 hour is very strong, and the daily too. So negates the single divergence. Often enough, you have to be a bit more careful with an hourly single divergence, especially if it's not backed by any 4 hour daily divergence. It's too weak to expect a lot of retracement on a 15-minute chart. So I hope that makes sense. So if you see some rejection on the 15-minute chart, that could make sense. For instance, well, it's not the best of signals, but for instance here, a bit of a wick. Well, it's not the best shooting star, to be honest, but not much of a confirmation. Maybe the 30-minute chart. That shows a bit more shooting star. The hourly, a bit of a shooting star. If you look at it from that perspective, you can see some price action. Also hit the daily R1 right there, so that could be reasons to think about a short at that point, and you're up about 40, 50 pips. Now, stop loss could have been above this high, but it's very tight. A more spacious one would have been above the daily R2, or above the H4, basically. Now, don't get me wrong. I'm not trying to show that this is just an example. All right, I'm just trying to show you how you can use the Camarilla from both perspectives, from breakouts, from bounces. Because prices at the L4 or at the L3, in this case, wouldn't justify longs because it might, well, depending on how you trade, but if you look at the 1 hour downtrend, you wouldn't want to go for longs here. You would be looking for breakouts to the downside, right? Just to extra clarify. Just because it says L3 long doesn't mean it's necessarily a good spot to go long. And with such a big momentum, in fact, I wouldn't be surprised to see price retrace and bounce, for instance, back to the 38.2 fib, find rejection back at the L3. Now this support broken could become resistance again for more downside. Could happen with the Euro too, right? So that's something that, but this is more, again, this is a bit different. Still using Camarilla as a resistance, but it's more of a break, pullback, continue. It's more of a fib trade, to be honest. So this is, again, a different subject, a different matter. When you can use fibs, obviously, with Camarilla too, but it's, in my opinion, a bit different. You're using L3 then as a resistance, which could still work, but it's a bit different philosophy again. Kiwi, the angle of the Kiwi seems a bit flatter. Depends on how much we zoom in and out as well, so you have to be careful of that. If you zoom in a lot, you're going to see flat 21 moving averages. If you zoom out a lot, you're going to see it very steep. So you have to find a balance. How much balance? Preferably try to, on a 50-minute chart, you want to see something like a week of price action roughly. On hourly, you're looking at 3 weeks, I think, something like that. Let's take a look. Not even that, about 2.5 weeks. Kiwi, yeah, it's the same story, isn't it? Popped up, was in a downtrend too, right? And showed a shooting star at the daily R1 that was very close to the weekly pivot point, missed it by a few pips. So here too could have been a rejection play. Now looking for a breakout trade, which actually just happened right about this price. So a short right in here could make sense. What kind of stop loss would be justified? Let's take a look at the hourly. I think above this top here would be a safe one, above 82. It's a bit wide, I know. It could be 81.77, but that's tighter. All right, move down just a couple of pips as we spoke, about 3 pips in the meantime. As we were speaking, sorry. But this is basically the breakout 2, but price hasn't gone away from that breakout as yet. This fractal, the L3, is a good one. It has a good downtrend on the hourly. It has a good downtrend on the 4-hour. It even has a good downtrend on the daily. So there's always potential of some follow through with such a downtrend, strong downtrend. Target L5, daily S2, and around 81. 81.15, between 81.15 and 81. So we're having a lot of breakout scenarios. On the dollar specifically, it's the dollar here too on the dollar CAD upside. Sometimes difficult with, if one particular pair is very strong, which pair to choose, the dollar is strong, but which one is the weakest of them all? That's sometimes difficult. The pound obviously broke, and the pound probably first, then the euro, if I remember correctly. This is the pound dollar hourly, so that's sometimes difficult. Looking at crosses to see which one is better makes sense. For instance, if you're doubting what the Kiwi break or the pound break, look who's breaking first. Or take a look at the pound New Zealand, for instance, to identify, which one is strong. Well, in this case, pound New Zealand is just a mess because it's just bouncing back and forth on this daily chart. So that doesn't give us much information here. Which maybe it gives us the info that the price is relatively at the top. Therefore, maybe pound a bit stronger. But it's a toss-up because we're still in the middle of all these pivot points. It was a pretty strong impulse up as well. So this one sometimes it's not that clear. Sometimes it's not that straightforward for choosing. So this is how we can use basically Camarilla pivot point indicator if you're basically new in here. If you're not new in here, obviously you know that already, but if you have any questions, let me know. Otherwise, we can still hunt for more potential Camarilla situations. It's pretty straightforward, isn't it? I don't want to make it sound too easy, but in a way, the Camarilla does help with identifying where price is, relatively speaking, in today's price action, in today's boundaries, right? That's the nice thing I think about Camarilla. It shows immediately where price is relatively in today's kind of boundaries, right? Each situation, each day, you kind of have a new set of marks, and at one point, price is going to be overextended and probably move too much in that day. It can still move a bit more, but the chances of catching some good pips are decreasing, right? Because every day, the currency has a tendency to move a certain amount. Some days it's going to be less, some days it's going to be more. But you won't see often EuroCAD, let's face it, move 1,000 pips. There's a natural limit it has. So by looking at price versus Camarilla, we have a immediate, very quick understanding of the situation of the price. Is price still between H3 and L3? We know it's still in the range bound of today, and it has great potential still left for today's price action movements potentially, because it still has a lot of space to the up and downside. If it's already way past H5 or L5, above H5 or below L5, then obviously you're getting into a zone where prices moved up a lot or down a lot, usually speaking. It depends. Sometimes you could still expect more upside because, for instance, the H5, L5 boundaries are so tight that they're too close to each other because the previous day was too small. That can happen. But typically, L5 and H5 are the boundaries where you don't want to trade it anymore. H3 and L3 is a zone where price is going consolidating. And if price is attempting to break the H3 and L3, but is still preferably below the H4 and L4, those are, in my opinion, great zones to look for breakouts. Or look for rejections, of course, depending on the overall trend and scope you're looking to trade it. So that's why I like the Camarilla. Because it just gives a great, instant, very quick understanding of intraday market levels, and I think it's therefore a bit more. I mean, not to say that the pivot point daily and weekly is not a good extra confluence tool, but there's a substantial difference with, for instance, seeing that the daily pivot is here and the daily S1 is daily R1 is here. One could wait for daily R1 or S1 to break. That's true. But I think the Camarillas give more and quicker indication of an intraday break than the pivots. So for intraday, I think that they have a grand importance. So the EuroCAD is not yet anywhere. It's still stuck. What did the moving average say? They're stuck. Look at the moving average, 2189 are intertwined with each other, and prices intertwined with each other. There's no momentum. There's no steam to any of the two sides. It's just going sideways within H3 and L3. So EuroCAD, for instance, is a pair that's not interesting at the moment, at least, in my opinion. Right? The dollar is trending. We know that. But the EuroCAD here is not showing anything interesting. So we saw a couple of great dollar pairs moving nicely, but the EuroCAD is not one of them. Alrighty. See, Björn, I'll take a look at your question very soon. Just hang on with me just for a second. Let's see, Euro New Zealand had some upswing here. The 21, look at that, 21 bearish. And I don't mind, here the 21 was down. I wouldn't mind looking for a short, for instance, below this level. Or a long above this, right? Because there's a fractal at those levels. Of course, looking at the hourly, I think does make sense to see if that if that would make sense to go short or long at those levels. Besides the Camarilla, and we see more of an upswing here, if anything, in my opinion, on the 4-hour as well. So the downside, I think, is a bit shaky. Plus, we have monthly and weekly pivot points below us. So this looks more bullish than bearish. So I would probably rather look for the break of the H3 than the break to the downside of the L3. I wouldn't do that. Would I go long upon price action signals here between L3 and L4? Maybe, but I would take it with caution. I would like to see probably an hourly wick off the weekly pivot point, for instance. All right, an hourly bounce off the weekly would seem a pretty good potential for long. Wouldn't jump in just like that without any confirmation. But if we do get a nice hourly wick or 4-hour wick, obviously that's also fine. Then it would seem like a nice bouncing potential. Yes, definitely. Everyone can get this MA indicator for myself if you send an email to my email address, just with a quick reminder. Please send MA indicator, then you'll have it very soon, either today or tomorrow max probably. Okay. Let's say pound odd, for instance. Here you see price approach the L3, but that's why I don't jump in the L3. I want to see a fractal at the H3. Now you can see that there was this fractal that came very close. Was it close enough? And that's always a bit of a debate. And if you really want to take it very strictly, no. But sometimes, even though it misses the H3 just by a bit, I do consider the fractal touch at the H3. The question is, how far is far enough, right? That's the question. In this case, it's about 12 pips, so that seems quite a lot to me. So with the pound odd, I would not consider this fractal to be touching the H3, right? It's not an easy one. Which one really touches and which one doesn't? So if you want to get used to that aspect, I would recommend probably really waiting for the fractal touch, right? But yes, this one I think was just a bit too far. This one obviously is a good one because this fractal is definitely hitting the H3. So I would consider this the breakout fractal, breakout level. But obviously price is now going back down, so it's not too relevant. Actually, would it make sense to take an H3, L3 long to the downside here, right? Break of L3 long. And if we look at the hourly chart, we could have some doubts about that. Might not be that bad, but obviously the pound odd is a bit of a funky currency at the moment, with a very strong down, followed by an even stronger up. Difficult to say, but it could retrace part of that strong up, so could make sense to look for breaks of L3 here. I don't think shorting the H3 here, considering the strong momentum up, was something that someone should be looking for. I mean, if you took these engulfing twins, great, but in honesty, I don't think it's anything wrong with skipping those, considering the strong upside. Euro yen stuck in the boundaries. Pound yen is following the pound dollar, and if you see a series of fractals like this, for instance, right, you could have the option of taking the closest fractal here, or if you want to be a bit more conservative, you can wait for the lower ones to break. That depends on whether you consider, what you consider the trend. If you consider it, and with the trend setup, I would even go for the closer one, the closest to break. It all depends on the circumstances. All of them, I think, have validity. So a lot of stuff happened and is happening before our room, and well, this one actually Yeah, also before our room, actually. I didn't look at the pound yen, but this happened actually just before as well. A lot of breaks, with the exception of the euro yen, euro CAD, in fact, at the moment. Difficult sometimes to choose which one. Sometimes actually kind of spreading the risk over a couple has its advantages, because that way we, for instance, I like to take 2, 3, that way not so dependent. I'm not so dependent on one particular pair, because each pair has, each currency, I should say, has its own crosses again, and depending on those crosses, one could accelerate and the other could pause, and the other way around. So to reduce the vulnerability of that, one could spread the usual risk one takes on one trade and spread it over a couple of trades, thereby still taking the same risk as original and as per risk management plan, but only difference is that you're spreading the, let's say, the dollar, for instance, the dollar strength trade over a couple, two or a couple of pairs. So, for instance, if the pound dollar would not break, if the pound dollar breaks but the Kiwi doesn't, and you only took the Kiwi or only looking for the Kiwi, you're still not in the trade, or you're about break even, whereas the pound dollar is flying down, for instance. On New Zealand, let's take a look. So I hope if you're more here, if you're in this webinar for more long-term stuff, bear with me. We could take a look at longer-term charts later on, but for the moment, Camarilla is more geared towards 15, 30-minute charts, so it has less sense to start with dailies, although we could do that later on still. Yeah, New Zealand. Alrighty. Let's take a look. A lot of momentum to the downside, indeed, but it's kind of getting some divergence between these bottoms. We can see price breaking recently below the L3, now kind of making a hook back. So it could be indeed something interesting. Let's take a look at the hourly like we did with the other pairs. Okay, what do we see in the hourly? Strong downtrend as well, with some divergence between this bottom, maybe a double divergence. The 4-hour is also kind of rounding here. Do you see the difference? The second time it's rounding. Here it's rounding, and here it's rounding. That's a bit of caution, a bit of something to be cautious of. Especially how it's kind of slowing down like this in a funnel, which is more looking like a falling wedge. And because of the double divergence on the hourly, I have a bit more of my hesitations with this breakout now. So I hope you see the reasons behind it. It's kind of slower price action, small 4-hour candles here, although bearish. And there's divergence here on the 4-hour AO, the fact that it's rounding. The double divergence on the hourly here, or 30-minute chart. It doesn't mean that this couldn't be a great short still. I mean, it really could go down, but I don't think it's worth it to take the trade. Even if it were to move down, I would be okay with missing any of those pips, because I think it's too much 50-50 in regard of the structure. So it could go both ways. It really could move down still, but it easily could also spike up and start to break out of this structure. Let's see. odd cat has kind of the same, but I think the difference with the odd cat is that at least it's some kind of channel, I would say. 1 second. No, it's actually also losing a bit steam here like that, in fact. Obviously very strong downside momentum though against the cat. But kind of the same story as the odd New Zealand, in fact. Kiwi, looking at the 4-hour chart, we don't even have to look any further. You can instantly see the price is oscillating sideways. So, well, we've looked at many pairs now. I guess we've probably looked at the one you wanted to look at. If not, let me know. Otherwise, now it's time for me to take a look at Björn's question. Silver break or fake is Björn's question. Let's take a look. Yeah, price is really getting close to that 1840 bottom. 1827. 1820, sorry. Okay. Very close, about $0.50 away. Getting dollar strength against silver and gold, not only against other currencies. So dollar accelerating with the weekly candle here, pretty bearish. And well, whether it's going to be a break or fake is something it gets difficult to tell. If I look at the overall dollar strength in the market, I think it's going to be a break, but doesn't mean that the break has to be smooth. It could break, make a deep pullback and go. I mean, that's something we don't know. We'll have to look at price action and candlesticks. How a daily, for instance, pushes through 1820. Is it with a big wick? Is it with a close near the low? That will give us information. So we're getting close there, but not yet fully there. But I wouldn't be surprised to see eventually, indeed, price, because dollar strength, price go down on this XAG. And even eventually XAU, although XAU has more ground to cover before it reaches this bottom. You can see there's more distance. But here too, breaking a wedge to the downside after a lot of momentum down, looking like a triangle now. Break of that triangle, still only the bottom left, just like the XAG. The break on the hourly. Okay, let's see. Break on the hourly. Well, from our perspective, we know that 1820 is a big bottom. So we do have still space to the 1820. This does look like a bear flag within momentum down, obviously. Yeah, it looks like this is still a pretty big bullish candle, but looks like if that 4-hour candle, looks like a shooting star on the 4-hour chart, to be honest. So if that low breaks, it looks like a break of the bear flag for downside. Let's see if there are any Camarilla levels here. L3, yeah. That's the break of the 4-hour low, the candle low of the 4-hour candle, and would probably approximately equal this trend line as well. So L3 break, that's probably what I would be keeping an eye on. Well, I hope that everyone had good trading last week and the week before. Month of September, we've seen so far, the last 4 weeks, we've seen nice dollar trends, some pairs even longer. This week, it depends. Well, we'll see with the news events, I guess. There could be a big impact on that. But let's see if the dollar trend can continue. Eventually, I do expect it. So pound dollar. It's just made a bounce at the L5. It doesn't have to be debounce. Doesn't have to be, the entire downside is over now. But with a news event coming around the corner, I wouldn't be surprised for price to go sideways now. That's why I like the L5 as a target. Your dollar indeed making the bounce at the L3, as we can see here. AUD bouncing pretty soon back to the L3 level. Could be pretty interesting now. It's got back to the same level. So if we see some price action candlestick pattern here, maybe on the 30, maybe even on the hourly, we could even see a retracement of this entire hourly swing back to the 50 fib. That's one of the things that, when you have a breakout on a 50-minute chart, sometimes you get a bounce back up quicker than you hope. If you're in this AUD short, you wanted to see the fall immediately, like the pound dollar, obviously. Kiwi 2, not getting much of a follow through. In fact, if you look at it like that, it's pretty dangerous development of these two bars. And the breakout didn't go as far as wanted. That's why one of the reasons why stop loss all the way above here is good, because then you don't get trapped. Because now, unless you exited upon this pin bar, if you took the tighter stop loss, the only way you can justify a tighter stop loss if you're quick on your feet and get an exit at this pin bar, for instance, here, right? Because otherwise, this stop loss is vulnerable for a bit more up and then down. But if your stop loss is higher, it's easier to live through a bit of retracement. Okay, Euro didn't get the follow through after that. Only went up about 20 pips. This fractal was about 2-3 pips away of this H3, and now maybe back in the bouncing spot. But if it doesn't do it quickly, if it breaks this fractal, I would have my doubts about it. Then it's something else is going on probably, if it doesn't get a bounce here. Well, I guess we looked at all the pairs, so, or at least most of the pairs. Maybe the Euro Pound, I think, is one of the exceptions. Anyone want to look at long-term charts? Is there anyone who has interest in that? Euro Pound is breaking to the upside. One of those pairs that missed the H3 of the fractal, but what's the difference here? As I said, sometimes if it's very close, this is about 1.5 pips. So this fractal came very close. H3 with decent moving averages, not the greatest moving averages, but they are bullish. They are above the 89. We had a good, we had a good break. If you want to wait for the breakout candle, you're going to get a bit worse price, but you will see a decent breakout candle here, and it's up about 13 minus the spread. Not bad for Euro Pound, which typically doesn't move that much. Dollar yen could be a good breakout too, actually, but it's quite a big consolidation zone. A break above 107.30 might lead to about 40 pips up to 107.70. Well, for those that are interested, if we look at the bigger time frames and set aside the Camarilla for a second, if you look at the big pin bar we saw on the weekly chart here, bullish pin bar, one might think that that is a reversal sign for the pound dollar. I have my doubts about that. I think it's more short covering of profit in front of a independence vote of Scotland. So I think because this pound dollar fell 1,200 pips, I don't see this as a reversal signal. I think it's just a short profit taking from shorts. I mean, this fell a ton. There must be some traders that are still hanging in there from 170, 171, 172, and that are closing some profit probably, or not even that from that high maybe, right? So of that referendum. So I don't think that price action signal really means all that much. In fact, the pound dollar could be very difficult to read because of that referendum. But for the moment, looking at the daily, it's still bearish 4-hour too. In fact, the 4-hour is pushing below the 21 band. So it could be a breakout trade to the downside. And if that happens, targets for the moment are 160, 159, 157. Eurodollar is kind of making this consolidation. It's been quite flat for a decent while, in fact. Just making a bear flaggy type of formation here. Within a strong downtrend, obviously. The 4-hour still has a very strong AO, so personally, I'm expecting price to make a downside at some point or another. And the question is when. At the moment, I would say the key support to keep an eye on is the nearest 4-hour fractal here at 129.06, very close to 129 level. Break of that should see downside continuation on the euro dollar down to, for instance, 127.50. That's a minus 272 target, but also a weekly bottom here. So that would be the target, and the green line, price breaking through the green line and through this fractal would be the signal. 129, 150 pips to the downside potential. When it does break below 129, I think a stop loss above this top here at 129.80, above 129.80 should be the safe, should be okay. Now, price could stay in this zone, of course, between these green lines further than we think. Could make 180, and down again. Could continue with this bear flag until probably something happens, some news event maybe snaps it. Dollar yen, basically the same story as the euro dollar, pound dollar. Looking for, it's a strong uptrend, and it's kind of making consolidation here. So that consolidation could break to the upside. Just like pound and euro dollar are showing dollar strength, the dollar yen too. Short in here, well, it's certainly against the momentum, obviously. That always has its risks. If done properly, I don't know exactly where you entered or if you still have to enter. If done properly, sometimes reversals can work out. But I guess you're going to have a modest take profits level to think about, in my opinion. If we look at the wave analysis, In my opinion, this is looking like a wave 3. And now we could get a wave 4. Which means price could go down to 23.6 fib with a 38.2 fib, 106.75 or 106.40, 35. 75 and 35. Let's take a look where those are. 75 is here. 35 is here. So yeah, there's a lot of support levels where price could bounce at. That's a bit of the problem. We never know how far a retracement can go. But if a 4-hour, maybe a 4-hour candle like that appears, then the bears do have wrestled back control of that candle. The entire structure, all of these candles though, are quite weak. They're just a bit sideways. That is not an appealing part of trading the dollar yen. So all in all, I wouldn't be surprised to see some downside towards those levels and then upside from those levels. But how, when, where, how long? Because it's a consolidation, we don't know. It could take long, it could drag out, it could bounce up and down a lot. And therefore that is the risky part about that, trading that this zone right in here to the downside. Another way is to wait for price to get to these support levels and take a bounce, or wait for price to indeed break out because of that, the consolidation zone here, I'd rather not personally trade it to the downside. But if the dollar yen were to have eventually divergence on the 4-hour chart, that could change things, but we don't have that as yet. And on the daily, it's still, the AO is still growing. So those two things make it less desirable, in my opinion. This is the break we really want to see. A pound yen like this, for instance, continue downside, like the pound dollar, one down move right away. Not too many ups and downs. Those are the best, obviously. AUD, by the way, had a great weekly candle, great breakout candle here. Very big candle compared to the last year of weekly candles. It closed near the low. This is looking like a grand breakout candle, and I would expect price not to really retrace much more than a 38 or 50 fib, and those could be good resistance and bouncing spots for downside. If price gets there today, might be later. Euro dollar, basically waiting for a break of this bear flag to the downside within this downtrend that we see on the daily and the 4-hour, strong momentum, and the weekly chart, strong momentum, strong trend on the daily and 4-hour. So this looks like consolidation, flat, sideways, therefore looking like a bear flag. And break of that bear flag down to 127.50, which is the target of the -272, but also the weekly bottom. That's what I would be looking for on the euro dollar. Well, folks, I don't want to keep you here longer, so this is all about what I found interesting from the long-term perspective. We'll talk about long-term maybe throughout the week, but today's focus was Camarilla. Tomorrow we'll talk about Forex strategy. If you have any questions, by all means, still let me know. In the meantime, let me show you the webinar schedule. Tomorrow we have Forex strategy. In the evening, Nana is going to take a look at what type of divergence is tradable, and then Thursday we got fib and wave trading. We'll definitely talk a bit more about long term. So if you missed the long-term stuff, then come back Thursday for sure, because that's where we're taking a look at fibs and waves. That's always a high component of that. Camarilla is more short-term. The strategy tomorrow, we'll look at both. And Thursday evening, by the way, although it's not visible as yet, hang on, we're going to take a look at fractals. All right, it's not popping up, but it's going to be on fractals. So hope to see you in one of these webinars, or all of them, preferably, of course. Thursday fibs, and Thursday evening fractals. So wish you all a great week. In fact, great trading as well. Oh, here you have it finally. Okay, sorry about that. Computer was a bit slow. Where are they? Here. How fractals can boost your trading. Thursday. So great week ahead and great trading as well. And see you hopefully soon. Cheers.